Palantir is now near the highest it's ever been, and some people are getting even more fearful of its possible crash. But it looks like the CEO Alex Karp has a plan. They're about to raise their revenue 40 times. Such a crazy goal, right? But this will make their price more reasonable. And their path to achieving this is clear. How will they even do this? Well, let me explain. Disclaimer. Palantir's movement is astronomical. As you already know, this week is insane. But this week isn't just riddled with good news. There's also negative news that could put fear to potential Palantir investors. As Palantir rose, so did the number of people who doubt the stock. In fact, these doubts have now turned to name-calling. As a user on X has shared, the rise of people who resorted to name-calling against Palantir is higher than ever. Jim Cramer recently called Palantir a meme stock. This comment, coming from such a well-known figure, could have serious effects on the stock. And we're not just talking about minor effects here. When someone like Cramer labels a stock this way, it can make investors nervous. The term meme stock carries negative associations. Not only does it imply that Palantir is only up because of empty hype, it could also mean that the company, at its core, isn't performing really well. And here's what could happen next. People may fear that the stock's rise is not based on solid fundamentals but on hype. This fear can lead to panic. Investors who were feeling confident about Palantir might start to question their decisions. They may think twice about holding on to their shares. This could lead to a sell-off, which would drive the stock price down. The drop in value could discourage even more investors from buying, causing a ripple effect. Such reactions could slow down Palantir's progress. A declining stock price can also affect the company's reputation. It may cause investors to miss out on long-term gains if they exit too soon. Even if the fundamentals remain strong, negative public perception can damage growth. But despite all this bad-mouthing, Palantir remains strong. And there could be a huge plan Palantir is cooking up. CEO Alex Karp could be doing all these as part of their long-term master plan of making Palantir the top AI company. With a potential target of $50, they're set to explode in the near future. This optimistic projection is based on the company's strong business performance expected through 2024. Recent stock market gains also support this upward trend. Palantir's ability to secure major contracts and grow its customer base has fueled confidence in its future. The $50 target might actually be within reach. The company has shown resilience and continues to expand its influence across various industries. Its focus on AI and data analytics keeps it relevant in today's market. As Palantir strengthens its position and proves its long-term value, this price target becomes more realistic. Investors may start to see this as a reasonable expectation, given the company's potential for continued growth. But this is just the first part of Alex Karp's plan, and we're actually seeing it in real time. As mentioned earlier, Palantir's price movement is insane. And it's all a setup for Alex Karp's next step in his plan to make Palantir grow. Palantir closed the week strongly. It was a week unlike any other, leaving everyone speechless. The stock just touched $44, hitting a 52-week high. But that's not all. This week saw Palantir reaching milestones of $41, $42, and $43, all in just a few days. Forbes recently featured a major piece on Alex Karp, Palantir's CEO. The media is starting to take notice of the Palantir story, helping to drive awareness. This week also marked a big achievement for the stock. It was the first time it closed above $40 every single day of the week. This just shows how stable their price is becoming. Looking back, it took about 2 months for the stock to normalize in the $30 range. Seeing Palantir maintain this level for an entire week shows real strength. There's a sense that institutional investors are taking notice and buying in. While some retail investors are likely coming in, this feels bigger, according to some analysts. It seems like the market is finally understanding the Palantir thesis. As more investors increase their exposure, it's clear they see Palantir as one of the few software companies that can truly profit from AI. This recognition is boosting confidence, and it's only the beginning for Palantir. In fact, we are now a few cents away from Palantir's all-time high of $45. Some people, as you may know, think that this price is just too much for a company that only brings in a revenue that's not at par with how they're valued. Basically, they think that Palantir is overpriced. This is where the next step of Karp's plan could come in. If Palantir reaches the $50 goal, which is leaps from their all-time high, Alex Karp could focus on raising Palantir's revenue. This might seem ambitious, but it's not out of reach. Let's look at the example of a company that has almost the same market cap as Palantir, Boeing. As of today, Palantir has a higher market cap than Boeing, yet Boeing brings in around $78 billion in revenue, while Palantir only made $2 billion. The gap between their revenues is huge, but it shows how much room Palantir has to grow. Will they even be able to close this gap and grow the revenue 40 times? It's such a crazy goal to have, but hear this out. Palantir has the potential to scale up and become as big as Boeing. The tech industry, especially AI, moves faster and offers more growth opportunities than traditional industries like aerospace. The demand for AI-powered solutions continues to rise, and Palantir is well-positioned to capitalize on that. The technology is constantly evolving, opening more doors for Palantir to expand its services and tap into new markets. However, this growth may not happen overnight. Once the stock hits $50, we might see the company focus more on scaling its revenue. Investors and analysts will likely expect Karp and his team to take the next big step toward increasing profitability. The foundation is there. Palantir has the contracts, the cutting-edge technology, and now, the attention of both the media and the market. The path to significant revenue growth is clearer than ever. But for now, the market is watching to see if Palantir can hit its price target. After that, the real push for higher revenue could begin, and it might take Palantir to heights few could have predicted. The $2 billion in revenue today could be just the starting point for what's to come. But here's what's more interesting. This growth becomes even more likely because of the smart financial moves Palantir continues to make. One example is their strategic partnership and acquisition of shares in Faraday Future, an electric vehicle company. Palantir isn't just relying on its core AI and software business. It's expanding into new areas that align with its long-term vision. These kinds of financial strategies show that Palantir is not just sitting back and waiting for growth. They are actively finding ways to position themselves for the future. By investing in innovative companies like Faraday Future, Palantir is setting itself up to benefit from industries that will shape the next decade. It's part of their broader strategy to grow beyond just AI, tapping into markets like electric vehicles and other tech-driven sectors. This kind of calculated expansion makes the path to increased revenue even more possible. On top of all this, Affinity Wealth Management LLC, a fund with $560 million in assets, recently made a notable purchase of over 100,000 shares of Palantir. This move shows growing confidence from institutional investors in the company's potential. The rising number of funds buying into Palantir is a strong signal of the company's stability and strength. These investments reflect trust in Palantir's long-term growth prospects and its ability to continue delivering results. As more funds add Palantir to their portfolios, it reinforces the belief that the company is on a solid upward trajectory. Only time will tell if Palantir will be reaching their goals. But here's what you need to remember. Palantir seems to be evolving into a winner-takes-all company. It's positioning itself as a leader in the tech and AI space, with few serious competitors on the horizon. History shows that in situations like this, those who focus too much on valuation often miss out on significant long-term gains. By worrying about the current price, investors risk losing sight of Palantir's potential to dominate its industry and deliver massive returns in the future. But what do you think about this? Let us hear your thoughts in the comments. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, please like this video, and don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video with as many people as possible. Let's get this news out there.